Hey everybody, this is Saim, your crypto CPA from the Lone Star State here at Akif CPA. In this video, we're going to cover, this is the part 2 of the 4 series on Bittensor TAO's tax system. And basically in this video, we're going to cover the very first type of participant in the system, which is the trader and investor. Somebody who has just purchased a TAO, converted theirs to a DTAO token or Alpha TAO token. And basically, all they're doing is just holding on to these tokens or converting these tokens or exchanging them, swapping them, or maybe staking these tokens. These are the type of folks that are considered as somebody who is actually very passive in nature in the eyes of the IRS and the Department of Treasury. So either you're buying and selling TAO, whether you're doing it on Coinbase, Mexi, and all these other exchanges, that's your very first thing. You've done it either with fiat or other cryptocurrency. And then you've gone over to the TAO's blockchain and you've maybe purchased TAO or DTAO or are staking your TAO. So again, these are the people that their activities are somewhat limited to this. Either it is on a wallet that is hosted by an exchange or somebody who's host or doing this in their MetaMask wallet or any other type of self-hosted wallet where you have full possession of it, right? So there isn't a whole lot in terms of taxes. This is something that is most people will fall into. They're either going to be holding it, converting it, or staking it and getting rewards on it. There's 2 layers of taxes for people like that are traders and investors. First is the crypto income. The crypto income is basically whenever you stake your TAO or your Alpha TAO, and basically the minute you get additional TAO or Alpha TAO in your wallet, the fair market value at that time, at that very second, is considered as taxable income. So that is considered as crypto income, and I'll tell you where that goes on if you are an individual. If you are an individual, it will go onto your Schedule 1 at the very most, and basically, and you're going to be paying your tiered income tax. You're basically wherever you are in terms of the various tiers that we have in our federal tax system. So then the second layer is the capital gains and losses. Let's just say that you didn't stake it, right? Let's just say you were holding on to your TAO and you converted it for an Alpha TAO. That is considered a capital gains and loss trade right there. And whenever you reconvert, that is still considered as a capital gains and loss. If you expense any fee in acquisition or in purchasing the TAO, you'll have a capital gains and loss there. And then at any point, if there's any kind of fees that you have paid out in the TAO's ecosystem, that in itself, because you're liquidating or you're selling your crypto, is considered as a capital gains or loss trade. So there's 2 taxable events for mostly that are just traders and investors, that are crypto income and capital gains and loss. Some of you that don't stake or have nothing in terms of you don't get any rewards whatsoever, you're not going to be hit with crypto income. But those that are holding on, are hodlers of TAO, or convert or swap to TAO, to DTAO, Alpha token, to TAO again, those are considered as taxable events, and you will have a capital gains and loss. And again, now, some of these centralized exchanges like Coinbase, they have TAO. So you will see that in January 2026, you're going to be receiving a Form 1099-DA, and that form will have all your trades, your proceeds, your costs, and then your timing of when you purchase that crypto, and it will all be centralized there. But for a lot of you I know that have acquired their TAO through other means, through Mexi, and then you're bringing it back to a centralized exchange like Coinbase, your 1099-DA form will be wrong. So make sure that you go into your centralized exchange and you are picking the right cost basis. Look and filter by 0 cost basis crypto, and make sure you pick all that correctly, enter that in, submit it, so you get that right 1099-DA form in January 2026. And make sure, if you're doing this for the first time, that you're picking your HIFO, FIFO, right type of accounting in your Coinbase, in your Uphold, Kraken, Binance, Gemini, Bitstamp, and more. Make sure you're doing the accounting correctly, and you're not nilly-willy changing this method every year just because to get a lower tax number, because that is wrong. Then that will penalize you in the eyes of the IRS. So if you have a self-custody wallet and you have not done anything, you need to make sure you utilize some of the third-party crypto tax tools. And these third-party crypto tax tools, they have integration with they might not have it, most don't have it. So you're going to need to find a way to get somebody to pull the trades, put them into a CSV, then upload it. And again, the right way of doing this is what? Gathering all your full data set, picking the right HIFO, FIFO, LIFO, categorizing, making sure that you have used trades correctly, and then reviewing and generating those tax reports. And a lot of times, obviously, you need to make sure that you're not counting the inter-wallet to wallet exchanges or transfers as withdrawals or deposits. Otherwise, that will mess up your tax figure, and most likely you're going to be overpaying your taxes. Statute of limitations, again, 3 years. If you filed your taxes incorrectly, 3 years. If it was an okay tax return, the IRS will close the chapter. 6 years if you have understatement or overstatement. 25 years, they can still come back to you after 6 years of you filing. And then if you have filed a fraudulent tax return, they can come back to you indefinitely. So make sure and file your taxes correctly. If you want to do amendments, they're not that difficult. Get all your crypto data at hand, finalize your full crypto income, make sure you pick the right HIFO, FIFO, LIFO, and it's it routes across, it's stable. You're not changing it year by year. Otherwise, you're repeating some of the crypto trades, and then again that your data is wrong. Then you have the wrong information to the IRS, which is the Department of Treasury. And again, a lot of you who acquired TAO through different exchanges, you might have been holding on to different tokens that are not part of the U.S. system. You need to file what's called a FBAR form, FBAR 114. That basically will entail if you have assets at any given point during the year that are more than 10,000. It's just reporting. There is no taxes associated with it, but you must do it if you meet the criteria. All right, and then a crypto tax amendment for most of you. Whenever you do it, you will get a 1040X form. Your tax returns, you'll have the first column, which is the original. Then you have the correct amount, the net change, and then you'll have a tax liability. You need to give an explanation of what happened. And again, you do not want to amend your tax return. That is not the best thing to do, because they'll have an agent involved at some point. Make sure you're doing tax loss harvesting before the end of the year, before December 31st. This is basically that loophole that we have in crypto, that we don't have the 30-day wash sale rule. You can sell your crypto, buy it right back, but you need to make sure the inventory methods are correct. For example, if you were to sell it and buy it right back and you're picking FIFO or LIFO, and maybe you're not at a loss, you're at a gain. So make sure your reporting is accurate. And again, before this thing gets abolished, get the of it. And again, you can, this is just one of the illustrated figures. You can do tax loss harvesting here, there, anytime you see a dip. If, for example, in this case, if I'm doing LIFO, if I purchased all this right here, this is high, then I can certainly do here and here, multiple points, right? But the point is to just do the tax loss harvesting. At least utilize those losses. You're still going to hold on to the same quantity. You're still going to have the same crypto, but at least now you have losses that you can use to offset against future capital gains. All right, if you need to contact us, please contact us. Contact our Houston office, which is info@ocipcpa.com.